the debt distraction, worries about a new U.S. recession, and what the ratings agencies may do, all roiling the markets. Todd Harrison is with us now. He is the founder and CEO of Minyanville Media, former trader. Todd, glad to see you. Thanks for coming in. Yesterday's sell-off was huge. The Dow, the S&P 500, the NASDAQ, all down more than 2%. S&P 500 at its lowest point of this year so far. What would you be doing in the markets? What should the average investor do today?
Well, I think from a trading perspective, S&P 1250 is the bottom of the range for the entire year. 1250, 1350 has been where we're trading. So if we break below that on a technical basis only, the market works to S&P 1130 if we break below. But that being said, I do think there's a window here to the upside after that eyesore of an embarrassment that happened in Washington yesterday, and in front of the potential downgrade that's coming. I think there's a window if the bulls are going to pull it together.
You mentioned this potential downgrade because the S&P 500 is now negative for the year. What if we get downgraded? What if that AAA rating gets taken away? Do we sink even lower?
Well, I think it depends where the market's trading when it happens. Remember, Canada, Japan, Australia all lost the AAA ratings. They were okay. I think the rating agencies are having their own world of pain right now, and no matter what they do, it's going to be held to task. But I think it's a function of where the market's trading. When that happens, as I said, I think that there's a window. If the market is going to rally, it has to be now, above 1250. And if the market rallies into that, then maybe there's a sell-off.
How likely is that rally, though, in your view, Todd? We've been talking about GDP data on Friday, which was abysmal. First quarter growth, 0.4%. We're talking about manufacturing data yesterday. The jobs data this week, many worry, are going to be as disappointing as it was last month. It seems like there's only reasons to sell stocks at this point.
Well, that's the trick to the trade, and that's why we come to work every day, is because this is an ever-changing puzzle. But, you know, whether I was listening to your earlier guest talk about a double-dip recession, I'll tell you, in my view, I think there's a difference between an economic recovery and a stock market rally. And I think that people need to realize that. I think for a lot of people, we've been in a stealth depression for some time now. You know, the middle class.
Right, because there were a lot of people saying, how can we see economic growth and no jobs growth? And as it turns out, it's because there was no economic growth.
But it's been masked by the lower dollar. It's been skewed by the spending habits of a slimming margin of society. So for most people, it's been tough for a while. So I think credit of a different breed, that of credibility, is going to be the issue at hand for markets at large.
All right, Todd, thanks very much. 1250 say for the S&P 500. Todd Harrison joining us, the founder and CEO of Minyanville Media.